Happy Finance Friday everyone, I'm Tom and this is Tom's Funny Magic. Today I'm going to be explaining what an ETF is. If you haven't seen one of my last 4 episodes, over the next couple of weeks I'm going to be explaining some of the different types of stocks. And I'll leave links to the last 4 episodes in the description. If you don't want to purchase individual stocks because you feel it might be a bit too risky or you don't want to spend time trying to research companies, then buying an ETF may be the thing for you. They are a group of shares that a company has put together, which you don't have to do any of the research for, and you're just buying into that collection. ETF stands for Exchange Traded Fund. This is because it's sold on the same stock market exchange that any other share would be. So you can buy them the same way as normal shares. And the fund at the end of them means that they are a collection of many shares. ETFs could be made up of shares from one industry, country, or a range of different companies that may appeal to the same type of person. For example, shares in companies that are all trying to use a high amount of renewable energy or are all trying to reduce waste. An example of a company that specializes in ETFs is Vanguard, which is an Australian company that puts together a few groups of shares and then lets the public buy into these collections. Vanguard has ETFs that fit into some of the stock groups that I've explained in my last few episodes. They have a high growth ETF, a high yield one, an ETF with shares in big companies across the globe, and another with only big companies that are in Australia. Buying into an ETF means that your money will be a lot safer and stable. You don't have to worry about a single share going down because another may go up. If shares in one company are consistently going down, then the company that's selling those ETFs may sell those shares inside of it and then buy some more shares in a different company, all without you having to do anything. And considering that sometimes the whole stock market may go down a bit, having shares across many companies would mean that the ETFs may not go down in value as much as some of the individual companies that you may have been thinking about buying stocks in. That's all for me today. Thank you for listening. Please hit the like button down below and subscribe for more content. Also, feel free to check out my website if you haven't already. See ya!